In this episode of the MSA Rental Market Update, we are looking at the Lake Charles rental market for conventional multifamily properties. As you can see, the Lake Charles metro statistical area is drawn out by CoStar down here in southern Louisiana, right along the Texas state line. Up here you can see we have Shreveport, here's the Dallas-Fort Worth area, Austin, San Antonio, and Houston. We've got Lafayette just to the east, Baton Rouge, New Orleans, and where I am currently recording this video from, Mobile, Alabama. So, now that we know where Lake Charles is located, let's take a look at the filters and see what we are excluding. And as usual, we are excluding all corporate, all military, all senior, and all vacation. We are only including market and market affordable so that we are only looking at conventional apartments. If we look at location, we are in market, metro statistical area, Lake Charles, Louisiana. So let's go take a look at the analytics and see what it looks like for all three asset classes combined. Here is the supply side snapshot for Lake Charles metro statistical area. There are only 132 properties in this market, totaling 9,421 units. This is a very small tertiary market. There are currently no units under construction, and in the last 12 months, 102 more units have rented than went vacant. And the vacancy has decreased. This is the first time we've seen a decrease from 16.9 to 15.9, which is still a whopper of a vacancy. And we've had rent decline. This is only the second market we've seen year over year rent decline from 1045 to 1003 over the last 12 months. As usual, we are not looking at the capital markets. We are only looking at the space market. If we scroll down, look at that long-term occupancy average. This market likes to be right at about 10% vacancy or 90% occupancy. And as we can see over here, it is sitting right on about 84%. So at the end of this, and it'll be interesting to see where we put this market on the market cycle chart, because we have no construction and no deliveries. So it may be interesting, maybe it's over here, maybe it's over here. It could go anywhere on this cycle chart. So we finally have an opportunity where we're seeing an increase in occupancy. We're typically seeing a decrease because of all the deliveries. So let's go take a look and see what the data is telling us for all three asset classes combined. So here is our rent analytic data for the Lake Charles metro statistical area for all three asset classes. We don't care what the owners are asking. We only care what they are collecting, so we will only be looking at effective rent. In the first quarter of 2022, it was at 1034, went down to 1013. Now, this is the first time we have seen a decrease in rents from first quarter to second quarter. As a matter of fact, it looks like that the top of this market was 2021 Q2. It has been trending downward ever since. And as we can see, 1034, 1013, 989, 975. That downtrend has continued all the way through to 22 Q4. We'll see if this continues. Let's go take a look and see what absorption's telling us, because we know there weren't any deliveries. So it was negative 83, so 83 more units went vacant in the first quarter than absorbed. Then 39 units were rented. Then another 66 units were rented, so we deleted that 83 units. And then 13 units went vacant. So we're sitting here at about 96 and 105. So we have a very, very small slight absorption for the year of 2022. And we can see that we started at 83% occupancy and we ended the year at 83.9. Remember, we don't have very many units, only 132 units in this market. So any small number is going to affect this occupancy quite a bit. So that is all three asset classes combined. Let's see if there is a specific asset class dragging it down or maybe even propping it up. We'll start with Class A's. Here is our Class A rent analytic data. There are 6 properties in the market totaling 1,377 units. Looking at effective rent, it was at $11.78 in the first quarter, went down to $11.47, down to $11.16, down to $11.93. So, as with the overall, it looks like that the top of the rental market for Class A was third quarter 2021. It has been trending downwards ever since. So if we scroll across, look at absorption, we can see that people are leaving the Class A space. It is currently sitting at 19.5% vacancy or 80.5% occupancy. That is a monster number, okay? Does not look like the Class A market is a place you would want to invest in Lake Charles, Louisiana. So the Class A is not telling us a very good story. It's really going to be interesting to see where we place this market on the market cycle chart. Very, very interesting. Let's take a look and see what our Class B story is telling us. Here is our Class B rent analytic data. There are 41 properties in the market totaling 3,820 units. Looking at effective rent, we started the year of 2022 at $10.29, down to $1,002, down to $9.79, down to $9.56. As with the other asset classes, we got to go all the way back to Q2 2021 to see where the rents were at the top of the market. It has been trending downward ever since. Let's see what absorption tells us. So a little bit of absorption in the third quarter and enough to give it positive absorption for the entire year for our Class B market. And we went from 79.5% occupancy to 80.5% occupancy. So interesting that the occupancy is ticking up even though the rents are still trending downward. We'll see if that can continue. Now, we do see an increase in the rents in first quarter 2023, but as with the other markets, we're not looking at the rents currently for Q3 or for Q1 2023 because there's just not enough information yet, and we've seen a lot of erroneous data. So, interesting story we're seeing. I think we're going to have an interesting place on the market cycle chart as I look at this data. So the Class B story, once again, not a very good tale. Does have a very slight trend in uptick rather from first quarter to fourth quarter, but we do have a 1 quarter downtrend in occupancy going from third quarter to fourth quarter. So a little waffling happening here. Let's see what the story the Class B or Class C market is telling us. Here is our Class C rent analytic data. There are 82 properties in the marketplace totaling 4,184 units. Looking at effective rent, we started the first quarter of 2022 at $9.45, slightly down to $9.41, down to $9.22, and a slight uptick to $9.26. So first time we've seen an increase in rents in this market. It took the Class C's all the way to the fourth quarter of 2022 to get there. As we can see, the height of the market, as with the Class B's, was 2021 second quarter. Class A's were 2021 third quarter. So, interesting tale. We have a little uptick in rents. Let's see what the absorption tells us. So we do have positive absorption. So the renters are starting to come back to the Class C market. They do apparently seem to like these rents. We went from 85.3% occupancy all the way up to 88.3. I hate saying all the way up to 88.3 because that is still a monster vacancy, but that is this market. And remember, the long-term occupancy in this market is 90%. So, interesting story we have here. We have declining rents since early 2021 in all 3 asset classes except the Class C. which had a very slight uptick in the fourth quarter of 2022. And it's because of the positive absorption that we have seen in the year 2022. So that said, where could we place this on the market cycle chart? Well, we know that we are well below this long-term occupancy average. The question is, have we made it through recession and are we starting recovery? Folks, I got to be honest. With what I'm seeing, with the Class C rents starting to tick up and with the occupancy being as low as it is, we are probably sitting right on the bottom of this market, especially for Class C. I'd even put it over here, maybe at the bottom of recovery, the Class C properties. A and B, I think you have a good argument for either this point or this point in recession. But it definitely appears with that deep recession, with no more properties under construction, with no more properties left to deliver, that this market has worked its way through recession and may finally start that upturn. So we'd put the Class C's here for sure in recovery. We'd put the Class A and B probably right here in recession, which really is the same point. Really A and B coming out of recession where C is starting to enter that recovery if it can continue. Now, we did have that little weakness between the third and fourth quarter, so we'll have to see if that contains, okay? So any argument here for either this spot in recovery, this spot in recession, which is really the same spot, or this spot in recession because of the Class A and B performance. You decide, but this is the first time where we've had an opportunity to see a market where it actually may be entering the recovery phase. Now, here is the most important part of this. Keeping in mind that Lake Charles, Louisiana is a one-trick pony. It really thrives on the oil and gas market. So if you can handle a one-trick pony and your risk will allow you to be in a not so diverse market, if you will, I do believe that we are at the buying phase of this market, right? Whether we're here or here, it does not matter because we want to start buying right here. Now, we may truck along a little bit before we start to go back up that recovery side because of the lack of economic opportunity, especially with oil trending downwards lately. But what goes down eventually comes up. So I think there's going to be opportunity in the Lake Charles market for the first time in over 50 properties or over 50 markets that we have looked at since I started doing this series the first week of January. I am calling the Lake Charles market a buy market. If you can stomach an oil and gas market, this could potentially be an area where you can start buying, all right? So, mark my words on that one. This concludes the Lake Charles metro statistical area. Tomorrow, we're going to head to the East Coast, almost to the East Coast, and we're going to take a look at Spartanburg, South Carolina, which is right along I-85 in between Atlanta and Charlotte. I will see you guys tomorrow.